I'm going to trade the DAX and show you how to trade it after work. Let's roll the intro, tell you all about it. Hi, welcome to the channel. If you haven't been here before, my name is Langers and I am the Scruffy Trader. What I'm trying to do is kind of put trading in the real world. It's really just me, a cup of coffee and the screens. No fancy stuff here, and I try and keep it as simple as I can, and also hopefully give you a little bit of inspiration in your trades. So if that sounds good, please click the little subscribe button. Genuinely helps, and if you've got a query, by all means drop it in the comments below. So what am I doing? Well, over the last sort of few weeks I've been doing quick trades at the end of the night, just to kind of show you that you can do it around a day job. Now the trick is to use a reasonably fluid market like the DAX or oil, something along them lines, and just look to be in and out. You want to be kind of done by 7-8 o'clock at night. It's now currently 4:25. So what I'm going to do is I'm going to pull the screens up, I'm going to build the chart up in front of you, and I'm going to trade it. One camera shot, straight through. And I can't be any fairer than that. So here we are, we're on the screen. There you go, it's the hours candle at 4 o'clock. If I drop it down to 5 minutes, you will see exactly where we are. 4:25, Monday the 14th. All right, so I'm going to take it back to the hour and let us build this up. So what do you do first? Well, it's very, very simple. First thing you need to do is analyze the chart. Now, when you're looking for a quick movement, maybe it's 10 pips, 20 pips, because contrary to belief, you don't have to sit at the screens all day. I do it because, one, I love it. I love my job. And I have a strange sense of humor, which you'll probably see in a lot of the videos. But if you can't, and you haven't got that luxury, you actually don't really need to spend that much time in front of the screens. All right? And I'll show you. So what we're looking at here, what can it tell us? Well, at the minute you can see it's driving up. It's had a little bit of a retracement. It's tried to push up, but look, it hasn't broken the top of here. And all the pressure was to the bottom. You can see that in this candle. And now it's turning red. Okay. So let's put some parameters in. I'll just turn these into so you can see them. There's a parameter there. There's another turning point just here. So straight away you have framed the price. You can see what it's doing. Now I have been asked if I'll put an indicator on just to help you, because it's okay being able to read the charts, and I can because I've been around them a long time. Sometimes you need a little bit extra. Now out of all the indicators, and there's hundreds, literally hundreds, but they all do the same thing. They kind of follow price, and they work off moving averages and one thing and another. I like a Bollinger Band because it is based from a moving average, but it kind of shows you a support and resistance area here and here. I'll just put it into the colors that I kind of like, just so you can see it a little bit thicker. And you can see the outer extremes. Okay, so what you're looking at is a moving average through the middle here, which is normally a 20 period. You can adjust it to suit yourself. And then you've got two outer extremes, which are two deviations away from the moving average. Now what it tells you is very simple. It's telling you it's trading above the moving average here. It's pushed out of the envelope here, you can see that clearly, and it's hugged it, but it doesn't like to do this for excessive lengths of time. Eventually something has to give, and that give point was here. All right, And that's where your support and resistance comes into play, because you can see the turning point there, and you can see it by these 3 candles. So to drive up with a tail, indecision, that cross, then a red candle. All right. If you look to the left, history repeats itself. You can see it's clustered here and it's bounced here. So that level was pretty solid. It is turned there and it's tested before. Simple stuff, guys. All simple stuff. It's done it again here and here. So just looking at the hours chart has given you a lot of information. And the part of the information you want to be looking at is the pushback in the envelope, respecting a level, and tails pushing down. Now you need to know how far this is going to go. That's where this level comes into. Now you also want to know, can I get 10 pips out of it? Well, use a measuring tool. From where the price is now, down to there is 28. So you've got room to now do your business. Good stuff. You've used the hours chart as an anchor, and it means framing the price, showing you exactly where the price is. So now you have to trade it, and you need to find a way to get into the trade. So look to your 15-minute. What's happening now? You can see a solid drive. It hasn't pushed out yet, so it's still going. There's no point doing a candle count because it's all in one direction. So you're going to have to work off this candle here. Take it to a 5-minute. Nice and simple. It's still not pushing out. There's no point doing a candle count because it's diving down heavily. So what we're going to do is we're just going to put 2 orders in at the base of the candle, like so. So put one there. And then another one at 15. Just so you might get a little runner. Dead simple. 2 orders. I can't get this any simpler, guys. I really can't. Alright. Don't need to worry about the Bollinger Band too much. Why don't I need to worry about the Bollinger Band too much? Because the emphasis is on the higher time frame. Markets have just triggered in. Lovely jubbly. Don't need that anymore. We straight into profit. Happy days. And if anybody's following me on sort of the Facebook and one thing and another, I did say I'm doing a fundraiser this week where half of all my profits this week, the whole lot, is going to charity. It's a charity that's close to my heart and my family, and I do it every once in a while. And this is my last trading week of the year, because after this I'm getting ready for Santa Claus, and who knows, I might actually get my greatest wish. And for those who follow me, let's see if you can work out what it is in the comments. But in the meantime, let's just have a look at this chart. It's very, very simplistic. And if you're going to trade, the best advice I can give you is keep your chart simplistic. You know, nobody knows the future. They really don't. Okay? But what you do know is the past. And you can use the past in order to guide what your decision is. So if I go back even as far as the 4 hour, right, let's have a look, see what this 4 hour chart is telling me. Well, this one tells me quite a lot, and I'm going to work its way down so you can see the process. I will put all my levels in, and you'll often see that. But the reason I've done it on a naked chart is I want to show you it being built from scratch. So if you're looking at this 4 hour chart, you can see there's been a huge drive down. It's pushed up, but now it's starting to move away. And the level we drew on the hour funny enough, is being respected on the 4 hour. Funny that, isn't it? The Bollinger Band is showing you the price is now trading below a moving average, and it's a 20 moving average, so it's quite key. And it's in the middle of the Bollinger Band, so it's got plenty of room to move about, okay? And this is where you want to be looking at where the movements are. When you're on a low time frame, like a 5-minute and a 15-minute, they're great for your entries and one thing and another. But if you're monitoring your trades and you're managing them, you want to really be doing it on a 30-minute, an hour, or even a 4-hour chart. And this kind of helps you when you're working as well, because if you're monitoring on a 4-hour chart, you don't have to look at the charts that much. In fact, you could look at it at dinner time at 12 o'clock, then at 4, and then at 8. So that's only 3 times a day. It's not much. And I know straight away somebody's going to spark off saying, why aren't you looking at it at 8 o'clock in the morning? Good reason. It's the open. And the open will throw a market one way before it goes the next. It's wild card. You want to see what the market's done and then trade either with it or against it. But the information will be told to you at 8 o'clock in the morning. All right? I don't recommend trading the open. It's a nightmare, you know. And a lot of the time it is just blind luck that you happen to get on the right side of the trade. Okay. So that's kind of what this is. So you're getting quite a bit of information. And the fact it's well within the Bollinger Band is telling you that it's got room to move. Now it will push out to one of them. So it's either going to work its way up here or it's going to work its way down there. Okay. But because you're underneath the moving average, adds a little layer to it. It's the bottom side that you're looking at. Okay. Drop it to 1 hour. What is 1 hour telling you? Well, as you've just seen, and you can see it clearly here, if the price comes up, it'll hit the top, it'll bounce, it'll go down, and it'll move around, it'll hug, then it'll move back, and it bounces from level to level, these two envelopes, like a pinball machine. It always does. So you try to put the odds in your favor, and basically, if this is hugging the top, you want to be looking to the downside. If it's hugging the bottom, you want to be looking to the upside. And there we are. We can see the turning point here. There it is. The level that you put in is corresponding right the way across. You can't deny that this hasn't been respected. Likewise, the one at the bottom. Same again. It's been respected over and over. All right. So you've got some nice levels to work between there and there. You've caged the price in, boxed it. You're now using the Bollinger Band as a confirmation. On the 4 hour, I'll just quickly remind you of that. You can see it's trading under the moving average and moving down. It's got plenty of room to go. On the 1 hour, it's telling you it's bouncing off the top and working down. So again, it's kind of confirming to the downside. All right. Now you're looking at the candles. Well, it's tried many times to push out, and as we've just discussed, doesn't like being on the outside of the Bollinger Band much, and when it gets to a certain point, it's going to bounce to the other side. Well, there's your turning point, just here. There's a long tail on this candle. Tells you the pressure's down. There is indecision here, so you wait. There is a clear rejection of the level here. So happy days. Now if I'd seen this earlier on this afternoon, I may well have traded it. But I wanted to do this last thing at night and show you it real time. Can't be any fairer than that. So you use what is in front of you. Again, clear downside. This may have pushed up, but look at the tail. it is all to the top. And it didn't make the top of the bolly. The bolly's bending over. You've got another rejection candle here, which is pushing to the downside. And then you just needed to put in some reasonable targets. Well, it's that level. That level is going to be a roadblock. Now you've got a choice. Now, a lot of you know that I scale and one thing and another. If you want to hold on to a trade, what you would do at this point is you take your 10 pips, one of them closes off. Result. The second one, you could move and put a target down here out of the way, but then start carving off manually pieces of it. So I've got it at £5 a point, you know, so this is pretty small position size. You go take £1 off. When it gets to here, take another £1 off. When it gets to there, take another £1 off. And just let it run down, but you're getting paid all the time. And that's a little bit about managing a trade. I'm going to go more into this probably this week, because I think a lot of guys get stuck with their trades thinking that X marks the spot. And what I mean by that is they just think, right, moving average has crossed here, so I get in, and then I have to wait till it gets up there and I get out. Well, there's a lot of things can happen in the middle. And it's not as easy as that. And these fallacies of saying, right, I'm risking 10 pips to get 30 pips. Doesn't happen that much. You're better off managing your trade a little bit like what I've just said. Yes, swing for the fences, swing for the stars, but carve off on the way. Because as soon as you're risk free, don't move your stop. You know, just leave your stop where it's at. Let it run 10 pips, take so much off the table. Let it run a few more pips, take some off the table. But leave little slivers to run. And you'll find that your bank starts building up quite quickly. And that's what we're trying to achieve for you. So what I'm going to do is I'm just going to let this play out. I'll drop it down onto a 5 minute. And then I'll come back to you at the end and give it a little bit of a summary, but it's not bad. The Bollinger, when you get down this far, you might as well take it off. It'll just confuse you because the time frame's so small. The Bollinger will give you false signals to a degree. So use it on the hour, maybe it's the 15 minute, but certainly not on the 5. So I'm going to let this run. I've just heard Winky come through the door, so time to go fill up my coffee. Because you've got to have a coffee, guys. I mean, come on. I'm not even going to say it, because you all know what I'm going to say. And yes, Scruffy does. I'll see you on the other side. Okay guys, I'm going to shut this one down. I'm closing it. There we go. Because it's pushed down, pushed down, pushed down. It's failing to get further. And just as that candle was ending, was showing signs of reversal, which is here. And that was backed up by this tail and the fact that this here is not pushing down. But the idea of the exercise was to grab 10 pips and hopefully have a runner. Now, this runs on, fantastic, but it's all about managing your trade and your risk. Now, it didn't go offside that much, you know, but you've got to be prepared for it. And that's why I keep telling you about tight stops. As long as you're around the screens and you're managing it, you can average in, you can average out, you can decide to kill a trade, you can decide to add to a trade. Management, very simple. But at the end of the day, we're only here to make money. And there's no sort of pats on the back for saying, I got 100 pips today. The only pat on the back is whether you've got £100 in the bank. And it doesn't matter how you do it. You know, you could do it with 1 pip or 100 pips. The fact is that you did it in a controlled manner and you knew how you're doing it in the first place. And that's what trading is. Trade management. Okay. So there we go. I haven't done much today because I don't trade on a Monday. But I wanted to keep this consistent in the vein of how we've been going on. And I wanted to give you 10 pips. Well, did that for you. So there you go. Basic chart, broken down, read, made a decision, stuck with it, and then managed the trade over the course of the last sort of hour and a half, 2 hours sort of thing. So there we go, guys. So I hope that all kind of made sense for you. And if it did, smash the like button. And if you got any queries, by all means, drop it in the comments below. Or drop me an email. All my details are in the description. So remember, guys, do what you love and the money will follow. See you all in the next one.